Hello everybody and welcome to our ESG Webcast number 3. Today my colleague Sarah Krammer and I am talking about the EU Taxonomy. What is the EU Taxonomy generally? EU Taxonomy is a classification system for environmental and sustainability for economical activities. In the EU Taxonomy, we do have 6 environmental objectives. Objective number 1, climate change mitigation, and objective number 2, climate change adaptation. We do have already in kind of a final version, so the technical screening criteria are already available. For the other 4 goals, so objective number 3 to objective number 6, so the protection of water resources, the circular economy, pollution prevention and control, and the biodiversity, we do have drafts since 2 weeks in a version where feedback can be given until the beginning of May. Additionally, in the EU Taxonomy, we do have up to 13 sectors elaborated. So a sector, that means an industry, and the different industries can be seen here on this slide. Regarding the EU Taxonomy, it's important that we are talking about taxonomy eligibility and taxonomy alignment. So what does it mean? Actually, an economic activity is taxonomy eligible if this activity is mentioned in the technical criteria of the specified sector. And if the KPI of this specific activity is fulfilled, we are talking about taxonomy alignment. So this is the basic idea. So that means generally regarding the classification, every economic activity has to be screened whether it's taxonomy eligible or not. And if it's taxonomy eligible, it has to be screened in the second step if this is taxonomy aligned or not. What are the KPIs for that? So basically, if we are talking about non-financing companies and non-insurance companies, so classical corporates, we do have 3 KPIs: the turnover, the CapEx, and the OpEx. And for the KPI, generally it has to be measured in percentage how many economic activities based on the 3 KPIs in relation to the total turnover, the total CapEx or the total OpEx are taxonomy aligned. Now I hand over to my colleague Sarah Krammer, and she will give us examples in order to have a better understanding for this concept.
The aim of Article 8 disclosures of the delegated acts is to increase the space for green finance through transparency about companies' environmental performance. The reporting requirements related to the EU taxonomy, as said in Article 8, affect both financial and non-financial undertakings. So there are different reporting requirements for financial and non-financial companies. The taxonomy specifies the content and presentation of information which has to be disclosed by companies. And so companies will need to disclose the proportion of environmentally sustainable economic activities that align with EU taxonomy criteria, as well as the eligibility by using a template. So overall, these companies need to address the following questions. Are the activities eligible under the EU taxonomy? So companies need to identify whether activities are part of the scope of the technical screening criteria, and they need to read the activities description from the technical screening criteria to assess whether the NACE code is related to the activity. The second question is, are the eligible activities aligned with the EU taxonomy? And so for each eligible economic activity and objective, companies need to check substantial contribution, do no significant harm criteria, and the minimum safeguards. The third question is, for those aligned, what is the proportion of my business that corresponds to these activities? Once we know what activities are taxonomy aligned, the percentage of alignment needs to be disclosed based on the proportion of turnover, CapEx and OpEx that the activity represents. Companies are required to complete a set of templates reporting on their eligibility and their alignment. Non-financial companies will need to disclose the proportion of environmentally sustainable economic activities that align with the taxonomy criteria, and the main KPIs for the alignment assets are the following. First, let's start with the turnover KPI. This KPI represents the proportion of the net turnover derived from products or services that are taxonomy aligned. The turnover KPI gives a static view of the company's contribution to environmental goals. The total net turnover is just the sum of turnover from taxonomy-aligned economic activities, not taxonomy-aligned economic activities, as well as non-eligible economic activities. The second KPI is the CapEx KPI, which represents the proportion of the capital expenditure of an activity that is EU Taxonomy aligned. Total CapEx means just any addition, whether it comes from purchases or from mergers of tangible and intangible assets. You should note that any depreciation or amortization, as well as any IFRS fair value adjustments, do not need to be considered. Leasing is only part of the CapEx KPI if it's capitalized according to IFRS 16 or if any finance lease is taken into account. The third KPI is the OpEx KPI, and this KPI represents the proportion of the operating expenditure which is associated with taxonomy-aligned activities. The operating expenditure covers direct non-capitalized costs, which relates to research and development, renovation measures, short-term and low-value leases, maintenance and other direct expenditures relating to the day-to-day service of property assets, plant and equipment, which are necessary to ensure that the continued and effective use of such assets. Leasing may only be included here in the OpEx KPI if none of the leased assets have been capitalized. The following table provides an overview of the relevant IFRS standards per KPI for all companies that prepare their financial statements in accordance with IFRS. So first, the total net turnover or absolute turnover should cover the revenue which is recognized pursuant to IFRS 1, paragraph 82. And even though IFRS 15 and IFRS 16 are also commonly used for turnover, these are not mentioned by the regulation. Some other transactions like intercompany transactions, interest income and turnover from discontinued operation is not relevant for the turnover KPI. CapEx means any addition, including addition from mergers, and for IFRS 16, intangible assets, IFRS 38, intangible assets, IFRS 40, investment property, as well as IFRS 16, leasing, where investments from joint ventures or investments in any financial instruments don't have to be considered. The CapEx KPI is limited to a list of potentially relevant but not capitalized expenditures, such as R&D expenses, maintenance and repair, short-term and low-value leases, and you need to consider that only direct costs are relevant for this KPI. And the following table provides an overview for all companies that prepare their financial statements in accordance with any local GAAP requirements. So the turnover is simply just the turnover from your local GAAP. CapEx, you should use comparable values as with IFRS. And for OpEx, it's basically the same as with IFRS. You just consider this limited and list of potentially relevant and non-capitalized expenses. And now the following section aims to present a proposed example of how a company should proceed to define if its economic activities are taxonomy eligible, if its economic activities are taxonomy aligned, and report on the 3 KPIs: turnover, CapEx, and OpEx. To do so, we will use an example as an example company which is buying real estate and exercising ownership of the real estate. The ESG real estate company buys real estate and exercises ownership. 97% of its revenue comes from this activity, and in addition, the company performs landscape maintenance, like planting, care, and maintenance of parks, and 3% of the revenue comes from this activity. The first activity falls under NAICS code L68, and the second falls under NAICS code N81.3. The first question or the first activity you can find under the eligible activity 7.7, acquisition and ownership of buildings. This description is consistent with the economic activity, and the activity is eligible to make a substantial contribution to climate change. The second activity can't be found in the technical screening criteria nor in any similar description to match. So this economic activity is not in the scope to make a substantial contribution to climate change and therefore is not eligible. The next question is how to report on a company's eligible activities. The proportion of turnover, CapEx, and OpEx that is linked to the eligible activities will determine the percentage of the eligibility as a company. In this particular case, you need to identify the proportion of turnover, CapEx, and OpEx, which is linked to an eligible activity. And for this example, it's buying real estate and exercising ownership of the real estate. So now we will only focus on the eligible activities. So the activity regarding garden and maintenance is not in the scope anymore, because any activity that is not eligible can never be aligned. And for the alignment, we will first check the following for each building. Does the building meet the criteria for substantial contribution to climate change mitigation? If the answer is yes, and the real estate fulfills the do no significant harm criteria, as well as complying with the minimum safeguards, it's taxonomy aligned. If not, you have to answer the question whether the building does meet the criteria for substantial contribution to climate change adaptation. If the answer is yes, it fulfills the do no significant harm criteria and is compliant with the minimum safeguards, this economic activity would be taxonomy aligned. And the next step is the disclosure of the KPIs for the purpose of reporting. And there you have to need the following specific templates, which are set out in the Taxonomy Article 8 of the Delegated Acts. Our analysis shows that real estate A is taxonomy aligned, whereas real estate B is just taxonomy eligible. And on this slide, you'll find or you see a table which shows the relevant data for all the 3 properties. It's turnover, CapEx, and OpEx, as well as the total amounts. In the next step, the individual KPIs and their share of taxonomy alignment or taxonomy eligibility must be determined. As an example, here are the KPIs for the taxonomy compliant property A. By dividing the turnover from real estate A by 60, you'll see that the share or the proportion of the taxonomy aligned KPI turnover is 50%. The next step, or actually the last step, is the transfer of all the KPIs into the reporting form for the EU taxonomy. And this is how the final template for the KPI turnover for ESG company looks like. The company has to report alignment activities in section A1. The taxonomy eligible activities have to be disclosed in section A2. And section B shows the proportion of taxonomy non-eligible activities from real estate C, as well the turnover from the landscape maintenance. And now I'd like to hand over to Eva.
Hello again from my side. So that was it for today. If you are interested in the basics of ESG, please watch our webcast number 1, Let's Go to ESG. If you are interested in sustainable finance, please watch our webcast number 2. And if you are interested in further ESG topics, please stay tuned, because we will give additional webcasts within the next weeks and the next month. Many thanks for today. Bye-bye.